Hi, everyone. I'm here with Steve Ehrlich, executive editor at Unchained. And he wrote a story that I think you'll all be interested in called Crypto Treasury Companies Are All the Rage. Could they cause an industry collapse? We saw a little bit of chatter about this on X, which is why we decided to look into it. So, Steve, based on your analysis and reporting, why is it that crypto treasury companies have become the hottest trend in crypto today?
I think it really just comes down to trying to capture the momentum started by Donald Trump's full embrace of crypto going back to last summer. As we've all kind of seen, Bitcoin has gone up and up, has hit multiple all-time highs above 110,000. But many altcoins have not followed suit. We haven't seen that same type of alt season. Traders are always looking for the next fad, the next trend, the next way to sort of get leveraged exposure to the best performing assets. And right now, that is Bitcoin, and Bitcoin treasury companies in particular have been dramatically outperforming Bitcoin in and of itself. I mean, I think in the story, I cited one statistic where Bitcoin was up over about 120% since the ETF started trading in January of 2024. MicroStrategy, or I guess strategy now, is up over 500% over that period of time and tends to trade at a premium of, I think we cited a statistic, 1.7 times the actual value of the Bitcoin on its balance sheet. So those are some pretty compelling economics for traders if they can get into the right companies at the right time. And as we detailed in the story, the success of strategy and some of its earliest followers have led to just a slew of copycats that are now trying to follow suit.
And do you think that that is sustainable? Like, and is this, this trading at multiples to NAV, is that something you're seeing with all of these companies?
I think it really depends because I sort of expected strategies premium to sort of move back down towards NAV as arbitrageurs came in and investors started moving towards the ETFs run by the likes of BlackRock and Fidelity. I mean, real blue chip, blue blood asset managers. But that hasn't happened. And that comes down to, I think the permanence of strategies premium comes down to something we explored in an earlier article. Just the fact that it's really been able to create this feeding frenzy for its options contracts, its convertible debt that has sort of led to its ability to defy gravity. But I have to imagine that, I mean, at this point, we're talking about almost dozens of companies that are following this playbook. They're not all going to be able to achieve that type of success. Strategy is a unicorn all to itself at this point. And there's plenty of companies. I mean, I think some that we detailed in the story are trading at premiums of 80 times the NAV, which is completely, I guess, insane in a certain way. It's hard to imagine that they're going to be able to keep those premiums, especially as more and more companies enter the space. Just the law of sort of efficient markets would dictate otherwise. And then the question that we really tried to explore in the piece is, well, these companies are going to be judged based on how well they are able to maintain that premium, how well they are able to outperform Bitcoin. And what we explored is what potential risks could they take and potentially I guess, poorly managed risks that could lead to contagion and broader problems throughout the crypto ecosystem.
Yeah, one thing is, I think a lot of the concern about, the types of systemic risk in particular that these companies could play in this industry is people were looking back at GBTC a lot and making comparisons there. So, why is that? Why were they focused? And in particular, they were looking at the role that GBTC played in the multiple collapses we saw in 2022. So explain why it is that that was the analogy people making and why they were concerned that these crypto treasury companies could someday play a similar role in future industry collapses.
So the collapse of GBTC was infamously called the Widowmaker trade. I forget by who, but it really came down to the fact that for many years, the GBTC trade, GBTC was traded at a premium, I believe up to 120% at one point in time, seemed to be a very safe, durable, and profitable investment. And because of these unique qualities, GBTC permeated pretty much the entire like trading and lending desk in crypto. So when that premium reversed into a discount and could not be fixed, that led to cascading bankruptcies and liquidations for formerly blue chip companies like Terra Luna and 3AC and BlockFi and Voyager and obviously FTX as well and plenty of others. And the parallels to that situation and what's happening now really come down to the fact that this is another asset, these stocks that are trading at massive premiums to NAV. And that's leading to questions about, okay, well, right now is these stocks, what are the chances that, especially companies trying to take on additional leverage to justify their performance bonuses and justify investments from their shareholders, what might they try to do? What could they try to lend out shares? Could they try to lend out their crypto on their balance sheet in order to be more aggressive in accumulating crypto? And if or when that happens, there are fears that we could see a sort of a rerun of what happened when GBTC collapsed a few years ago.
And so that would be if those stocks were to be used in some fashion. So just kind of finish out how it could be that, yeah, they could play this role that GBTC played in 2022.
So what happened with GBTC in particular is that shares in that closed-end fund were taken as collateral from trading desks and pseudo banks, et cetera, to extend loans. They were seen as a very safe form of collateral because one, they were backed by Bitcoin, and two, they, for the most of their life, they had a pretty sizable premium. So it seemed safe. And obviously it turned out to not be so. These stocks, these shares, I mean, the parallels are, they're also backed by crypto on the balance sheets, although sometimes it's unclear exactly whether or not that crypto has been like rehypothecated or pledged as collateral in other places. And they're going to be fairly liquid because they are shares of stock that anybody can buy or sell from a brokerage account. And then it's pretty easy to imagine a world, and a couple of sources that I spoke to for the article, they said that this is not happening yet, but it only takes one or two prime brokers, trading desks, OTC desks, to start accepting these shares of stock as forms of collateral to extend out margin. And then all of a sudden, this is a copycat industry. It's going to permeate throughout. And then what happens if there's a market reversal and these companies all of a sudden can't roll over their debt, or the conversion prices for equity grants are no longer in the money and they have to sell off their crypto to pay back principal on these sometimes 9 and 10 figure loans that they're taking out. All of that can lead to a cascading series of crashes. And that, again, we're not set up for that to happen quite yet based on my reporting, but it's still very, very early days for this new type of industry. And I think what my reporting, my story tried to do is sort of just put out a warning that it's important to remember the lessons that we learned from the collapse of GBTC, so that unnecessary risk taking or irresponsible risk taking when it comes to these types of companies and these types of shares of stock don't happen again.
Yeah. The way that I, was looking at that is basically when they were talking about how there could just be one or two companies that started off, that then happens is, others want to compete. They want a part of that business. And so then it's like you're competing on terms that are better maybe in the short term for the borrowers, but then ultimately not perhaps like in a systemic way. So, Steve, it's been super interesting and fascinating talking to you about your story. For those of you who didn't get to read the full analysis, I definitely suggest you check it out. He goes into a lot of detail on, kind of how this could play out, what's happening right now, and then what the similarities might be to GBTC. So, otherwise, thank you so much, Steve.
Great. Thanks, Laura.